This is a Forex Preview here at XM.com. Thanks for joining us. We'll be taking a closer look at the European Central Bank meeting coming up on Thursday. I'm Christina Marujos, and joining me today is Senior Investment Analyst Marios Hadjikyriacos. The Eurozone is being weighed by fresh lockdowns in many countries, all while inflation across the region is surging. Now, this is the environment in which the European Central Bank meets on Thursday, when it's expected to decide how much it will slash its asset purchases. What are policymakers likely to signal, Marios?
Hello, Christina. Well, it's definitely going to be a very interesting meeting because the European Central Bank is caught between a rock and a hard place right now. So on the one hand, you have the growth outlook. It's not really impressive. COVID restrictions have made a comeback in several countries. The labor market is still far away from a full recovery. But on the other hand, you have inflation accelerating pretty dramatically, and that's making several members of the governing council nervous that it could stick around. So against this backdrop, they are going to have to decide what to do with asset purchases, right? And it's a difficult decision because if you do nothing, you risk pouring more fuel on the inflationary fire. But if you cut back too much, you might shock the bond market, and that could cause a replay of the European debt crisis. So that's something you want to avoid. What are they likely to do? I think the compromise is going to be to cut asset purchases in about half. So right now, between all of its asset purchase programs, the ECB is buying around 80 billion euros per month in bonds. I think they are going to slash that towards 40 billion per month, and that will appease both the hawks that are terrified of inflation and the doves that are worried of causing havoc in the bond market.
Turning to the euro now, it's been struggling lately, especially against the dollar, and it looks like it's only going to get worse for the single currency once the Fed moves into raising rates. What is the medium-term outlook for the euro?
Well, that I think is pretty dark. So I've been bearish on the euro this entire year, and I haven't seen anything to change my mind heading into the next year. So it really comes down to the following. The European recovery is still anemic, right? And in contrast to other central banks like the Fed, Bank of Canada, Reserve Bank of New Zealand, Bank of England, the European Central Bank will continue with asset purchases, and it's not even considering raising interest rates, right? This meeting is probably going to bring a lot of volatility depending on what they signal and what tone President Lagarde has. But overall, I think that the outlook for the euro remains dark. We are likely to see monetary policy divergence weigh on the single currency. And specifically, if you look at market pricing, the markets are still factoring in a minor rate increase by the European Central Bank next year. I think that's very unrealistic, and the ECB is likely to push back against this, which allows more scope for losses in the euro moving forward. And the final legs of the bearish euro argument are politics. We have a French election coming up next year. That might be very contentious. And the final part is global risk sentiment. So the euro tends to underperform during periods of market stress. And right now we have an environment where the global central banks are tightening while asset valuations are very pricey. So this feels like an unstable environment, and any pullback in the stock market, for example, could also be bad news for the euro.
Marios, thank you for joining me today. This was a Forex Preview on the European Central Bank meeting on Thursday here at XM.com.